Welcome back everyone. This is the second part of the video government budgets and fiscal policy. In this part we will study the components of a government budget. This is where we left off in the last part, components of government budget, and we discussed different components but we didn't go into the details. But in this part we will discuss each and every component that we named in the previous video. So let's get on with it. Revenue budget, that's the first one. If I go back, you can see on the left side we have revenue budget, on the right side we have capital budget. So in the case of revenue budget, what is revenue budget? This financial statement includes the revenue receipts of the government, that is revenue collected by way of taxes and other receipts. This means that all the expected government revenues, whether it's taxes or through other ways, it's recorded in the revenue budget. So how much government is expected to generate revenue in the upcoming year. So that's the revenue budget. Now below revenue budget, if I go back, you can see that below revenue budget we have revenue receipts and revenue expenditure. Now let's discuss revenue receipts. Revenue receipts, these are the incomes which are received by the government from all sources in its ordinary course of governance. So this means that the ordinary source of governments, that's the important part here. The ordinary source course of governance means that these are the expected incomes that the government generates every year. There is no doubt about that. So the government knows that it is going to get tax revenue. So tax revenue consists of the income received from different taxes and other duties levied by the government. And non-tax revenue. Non-tax revenues include fees, fines and penalties, profits from public sector enterprises, gifts and grants. So in this case, the revenue receipts, it was further divided into tax revenue and non-tax revenue. Tax revenue is the tax that the government receives from different people. Either it's direct taxes, that is the tax on income, or indirect taxes, that is taxes on goods and services, or it's also the taxes or the duties that the government levies on imports or other stuff. So that's one. The non-tax revenue, fees, fines and penalties are part of non-tax revenue, and also profits from public sector enterprises. These are the enterprises or firms that are run by the government, so of course the government will receive the profits. And finally, gifts and grants. These are from people sometimes, or from the other, like from other countries as well. So that's non-tax revenue. Now if we go back, revenue receipts, we are done with that. Tax revenues, non-tax revenues, we are done with that. Direct tax, indirect tax, that's also completed. Now on the revenue budget side, we have revenue expenditure that is left. So let's discuss that. Revenue expenditure is the expenditure incurred for the routine, usual and normal day-to-day running of government departments and provision of various services to citizens. So revenue expenditures are the expenses of government, how much it spends on day-to-day activities and normal usual day-to-day activities in different departments, and when it is providing services to people. So for example, if there is a social security department or national identity card department, and they are providing services to the general public, they will have running expenses like electricity and wages, salaries. So that means that those are the expenditures that government has to pay. So those are running expenses, normal, usual, day-to-day expenses that are required. And what are these? Some of these include expenditure by government on consumption of goods and services. So when government consumes goods and services, That's part of the revenue expenditure. Expenditure on agricultural and industrial development, scientific research, education, health and social services. That's also part of the revenue expenditure. Expenditure on defense and civil administration. That's another part of the revenue expenditure budget. Expenditure on exports and external affairs. Exports are the goods and services that the government sells to foreign countries. Not exactly the government, but the people in the firms which sell to foreign countries. And external affairs, government has to government has to maintain ties with other countries. Though, so external affairs, government also has to spend on that. And payment of interest on loans taken in previous year, that's also part of revenue expenditure. So government sometimes has to take loans from other countries, so it has to pay the interest on those loans, and that's also included in revenue expenditure. And finally, subsidies. Subsidies are the benefits that government gives to different sectors in the form of price cuts. So for example, if the price of sugar is $2 per kg, so what it will do is it will say, okay, guys, sell it for $1.5 and I'll pay the rest. I'll pay the $0.5 to you. So that's subsidies. So these are part of the revenue expenditures, the expenditures that the government pays on day-to-day normal running of government departments. We are done with the left side of the budget. Let me go back. The revenue budget, we are done with that. Revenue receipts, expenditure, tax revenue, non-tax revenue, direct tax, indirect tax. So that's revenue budget. So basically it means how much the government receives the revenue, expects to receive the revenue, and how much it expects to spend in a year on daily basis. Or so on the other hand, we have capital budget. Capital budget is further divided into capital receipts and capital expenditure. So we will discuss that part now. Capital budget. This part of the budget includes receipts and expenditure on capital account projected for next financial year. First part is capital expenditure. Capital receipts. The first part is capital receipts. Receipts which create a liability or result in a reduction in assets are called capital receipts. So the main items of capital receipts or incomes are loans raised by the government from the public through the sale of bonds and securities. They are called market loans. And these are also liabilities. So the government gets money from the public through loans, but it's also a liability on the part of government because it has to pay that money back next year or in 5 years or however long the loan has been taken for. So that's first, capital receipt. The second is borrowings by the government from RBI and other financial institutions through the sale of treasury bills. These are also kind of loans. So government borrow money from different institutions by selling treasury bills or bonds. In the first case, here the government was taking money from public. In this case, the government is taking money from institutions. Again, this is a liability, and it's part of capital receipts. Now we have discussed two ways the government can take money. The third one is loans and aids received from foreign countries. So here we are talking about foreign countries now and other international organizations like IMF, International Monetary Fund, and World Bank, among other institutions. So government, when government takes money from other countries or international organizations, again government will receive money. That will include the receipts for the government, but it's also a loan, it's also a liability. It has to pay back that money eventually. The fourth is receipts from small savings schemes like the National Savings Scheme. Sometimes the government also has different schemes, and those schemes could be aimed at getting money for different purposes, and for example generating revenue for creating a dam or some other things. So, or national savings schemes, and the government, when it receives those the money from those national savings schemes, that's also part of capital receipts, because the government has to pay that money back as well, but it also gets some money for the government. And finally, we are talking about loans, right? And on every of the 4 points, the loan was included. And finally, recoveries of loans. In that case, the government also gives loans to other institutions, countries. So when government receives that loan money back, that's also capital receipt. So here we have 5 different components, 5 different items. Now let's move on to capital expenditure. Capital expenditure, any projected expenditure which is incurred for creating asset with a long life, is capital expenditure. Here the important word is long life. Whenever government spends is expected to spend money on creating an asset that will be used for a long period of time, that's part of capital expenditure. So it means expenditure on land, machines, equipment, irrigation projects, oil exploration, and expenditure by way of investment in long-term physical or financial assets are called capital expenditure. So all of these expenditures, these are long-term. Government whenever government plans to spend money on such projects, it knows that it will take it will be used for a long time, whether it's irrigation projects or equipment or different machines. These are used for many years. So these are also these are part of capital expenditure, part of the government budget. So that's all. That's the government budget. Let me go back to the government budget, the components. We have discussed all of these parts. We started with government budget, then we discussed revenue budget and its components. Finally, we discussed capital budget and its components. I hope it's clear. If you have any question, you can ask in the comment section. So I'll see you in the next part. Goodbye.